You're welcome back to this section. The next item on our list is receivables and payables. Now, when you check the illustration, we have receivables and payable. Now, what is receivable? Business receivables refer to the amount owed to a business by its customer or clients for goods and services sold on credit. This can include account receivable, outstanding invoices, unpaid bills. Receivables are considered as assets, that is, they are current assets, as they represent future cash flow. Effective management of receivables is crucial for maintaining cash flow, reducing bad debt risk, and improving financial stability. So now, from our illustration, the said 50 bags of cement gum and 35 bags of waterproofing was sold to Bilcaf Ventures, which means Bilcaf is a debtor rather. Bilcaf is a debtor to Zilog's Building Solution. So now let's go back to our QuickBook. Now then we need to go back to our customer centers. Then we'll check. Let's see if we have Bilcaf before. Okay, there is nothing like Bilcaf. So now let's insert Bilcaf to our customer. So that's a new customer, Bilcaf. Now I'll check the name. Okay, there's it, Bilcaf Venture. So let me just copy this, Bilcaf Venture. All right, so I'll drop it here, Bilcaf Venture. So that is Bilcaf. All right, and then the name, let's just use any name. Okay, all right, and the Bilcaf address. So we just input, so number 9 Asadam Road, okay, then the city is Ilorin and the state is Kwara, and okay, so now I can close this. Now Bilcaf is a debtor and we need opening balance for Bilcaf as a debtor. But remember, in our previous class I said that we don't need to input the amount of that debtor into this section, because QuickBook we recorded it as uncategorized transaction. Because we will not be able to state what Bilcaf bought from Xerox. So all what I have to do is just to save Bilcaf first as one of our customers, as you can see that having a zero balance. Then the next thing is that we can now go back to our home page to create invoice for Bilcaf. Invoice for Bilcaf. So now let's open our invoice. Now we're about to open invoice. Then we'll now select the day, which is as at 31st of December 2024. So I'll select the date. Then we'll select the customer, which is Bilcaf. That is Bilcaf. Then what next here is that we need to pick what Bilcaf bought. 50 bags of cement gum and 35 bags of waterproofing. So now let's go back to our QuickBook. And then our QuickBook, Bilcaf bought item. So we'll pick what Bilcaf bought. No, this is not what Bilcaf bought. Bilcaf bought our this cement gum, and also Bilcaf bought one of our, which is waterproofing of 30 kg. Now, the cement gum, what is the quantity? Let's check the quantity. The quantity is 50 bags. Are we there now? 50 bags of cement gum, and the second one is 35. So we have 50 bags and 35. Okay, so now as you can see, that you will see that the total amount that Billycalf is owing Xerox now is 2,337,500. So and then here is the date, which is our opening balance for debtor. So we can now save this and close. All right, done. Now when we go back to our balance sheet, you will see that we have debtors now. Let's see it under the current. Now, good. Look at it. Account receivables. Are we there now? Account receivables. Are they being that we now inputted that the amount of that goods into the interface where we created for Billycalf? It will just show uncategorized transaction here. Is that clear now? So now, but as we created an invoice for Billycalf, it now give us what really happened between Xerox and the Billycalf. So let me click on this to 2,375,000 naira. What really happened there? So I'll double click on it, and then now here's now it is total account receivable. So which means that we have we have account receivable there, which is, then let's see our income statement. Is there anything there which is the statement of this profit and loss? Now you can see that it is nothing. Let me click all. Okay, now here is it. Now this is what really happened here. We have a sales, is that not? We have a sales which is cement gum 1,500 and waterproofing, which is 875,000. You know why? Because we said receivable, is that not, is a future cash flow. So, and on our program now, we are using accrual basis of accounting. If you can remember, when we were dealing with preferences under company, we said that we selected accrual basis. Accrual basis. Let me confirm that. Accrual basis. Okay. Accrual basis. All right. I'm checking where we selected that accrual basis. General. No, it's not general. Okay, here is it. Report and graph. Out there now. As you can see that we selected accrual. It means that we sold the goods out, but we haven't received the payment in respect of what we sold out. But automatically, Quickbooks should record it in our sales account. So now that is why we are having it that we made the sales from cement gum, which is 1.5 million naira, and waterproofing is what is 875,000 naira. But we know that is a bill receivable, is that not, which is yet to receive. So that is why when you see our balance sheet, it is under the balance sheet that we have accounts receivable. Also, if you click your trial balance as well, it will be there that we have account receivable. Look at this now. We have account receivables, which is 2,375,000 naira. Then we have inventory assets. Is that not? And then our inventory asset, that is from what we have inserted. Is that not? What we have inserted previously. So now let's see how to record our payables as well.